Hello there and welcome to Talk on Nevada. I'm Andy Matthews, and joining me this week from the Nevada Policy Research Institute, fiscal policy analyst Geoff Lawrence. And we're going to be talking about the estate tax, more commonly known as the death tax. Geoff, welcome.
Thanks, Andy. Good to be here.
Now, Geoff, the death tax is actually a pretty lively topic right now, ironically enough. There's a lot of discussion about where this is going, what's going to happen. What are we talking about when we talk about the death tax? This is an issue that really drives me nuts. I'll get more into that later, but how is the death tax implemented? What does it mean when we talk about the death tax?
Pretty simple, actually. It basically means that upon your death, the government will seize about half of the value of your total assets. And that's not just the cash that you have in the bank, but your total assets. So any land that you might have, any ownership interest in a business, any stocks and bonds, the total value of what you own, the government just takes a chunk out of it.
So you die and the government thinks it's naturally entitled to half of what you've accumulated over your lifetime. We talk about kicking someone while they're down, right?
Yeah.
Tell us, where does this debate stand right now? What is the current death tax rate? What policy proposals are out there to change it? Who's trying to change it? What do people out there who are concerned about this issue need to know about where this debate is heading?
Well, the death tax is generally, multiple surveys have shown that most Americans consider it to be the least fair form of taxation. So there's been this drive to reform that type of tax. And in 2001, actually, at the federal level, they passed legislation that would at that time, it was 55% was the rate of the death tax, and it's been phased down. And actually, next year it would be eliminated altogether, except that the new administration and the executive budget, Barack Obama's executive budget, he's included the death tax at the current rate. It's 45%. So he wants to block it from disappearing, and this is kind of restarted this whole debate. Is that the government basically they feel entitled to take half of what you own upon your death instead of allowing you to keep it and pass it on, control it as the owner would like.
There's another element of this tax, and this is the part that really gets me going. And you actually talk about this point in a recent commentary you wrote, which was cleverly titled Exit Fee, which I liked a lot. It's this idea that the death tax really is worse than just a tax. It's double taxation. You're actually being taxed twice. How is that the case?
Well, yeah, because as an individual goes through life and accumulates a store of wealth, he's being taxed on that wealth the whole time. So for every revenue stream, whether it's income tax or capital gains tax or a variety of other taxes, basically every income stream that you have is taxed. And so that store of wealth that you have at the end of your life is after-tax dollars, which is now going to be taxed again at a rate of 50% almost, So this is an egregious form of double taxation.
Now, you make another point in that same commentary that I mentioned earlier, and what you said was that this tax is particularly destructive for small business owners, family business owners. How so?
Well, because when you die and the IRS collects this death tax, they want to get a cash payment that's equal to 45% of your wealth, but most people's wealth is not held in cash deposits in the bank. Most people's wealth is in some type of stock or bond or ownership interest in a small business, actually. That's where a lot of this death tax comes from, is people that have started businesses. And in order to pay that tax, they now have to sell off the business or sell off the farm. And the result is that business is now out of business, and all the people who used to work for it are now unemployed. So that's that's a big kind of defeating result of this tax.
Now, on the other side of this issue, there are a lot of people who do think that this is a just tax. And the case they make, and to play devil's advocate, those who do pass on, when they bequeath their life's earnings to their descendants, they're passing money on to people who really haven't, in a strict sense, earned it. And you get into some of these charges of, well, now this is how you create this sense of old money, and people are, money is staying within the family they really haven't earned, it's just been passed down through the generations. Isn't there a case to be made that if the government were to confiscate this money, they could redistribute it, they could use it to fund services, and people who wouldn't otherwise have this wealth will now have access, at least to services, and you're going to get money out of the hands of people who are just kind of sitting around and really not earning it anymore?
Well, there's a number of problems with that argument, Andy. First is that that wealth already has been taxed, as I mentioned, and it's the property right of the owner to pass it on and distribute it as he would like, because it's under his control. Secondly, the death tax basically it contributes to unemployment, so it puts a lot of people out of work. And one of the effects is that because the government is now pulling in less income taxes because of higher unemployment, there's actually some research that suggests that because of the death tax, the government gets fewer revenues. So it's not actually adding to government revenues, it's not adding to government services. And that's obviously a pretty bad result.
It kind of undercuts this argument that they make that this is for reasons of justice. They need to redistribute this wealth and get it to people. You're saying it's actually likely to result, or may very well result, in less revenue actually coming from the government.
Yeah, and it gives people an incentive to go ahead and consume all their wealth instead of planning for the future. Because if you think that you can invest in some type of capital equipment or invest your money in a business or something that you'll be able to control even after your death by passing it down to your family, making your children better off, you're going to do that. But if the government's going to take half of what you own upon your death, then you're just going to spend every weekend, on the Las Vegas Strip and get rid of that wealth as fast as you can.
All right, Jeff, gripping topic. We're going to leave it at that for this week. Thanks for being here.
No problem.
And I want to thank all of you for tuning in to this week's edition of Talk on Nevada. Be sure to check us out on the web. npri.org is the site for more information on this topic and other private solutions to public challenges facing our Silver State. And while you're there, don't forget Karl Rove, September 23rd, is going to be the keynote speaker at MPRI's 18th anniversary celebration. Be sure to get your tickets online today. Thanks, and we'll see you next time.